Hi guys, I'm Toni Taylor with Interconnect Mortgage. I'm here with my friend Alex, who's an expert in the tax and the accounting space. And, of course I do mortgages, so we overlap a little bit here on what we do and working with people. And he and I were just discussing the benefits and the some of the tax issues with regards to people in investment properties. So give us drop some nuggets on us, Alex.
Oh yeah, sure. So a lot of people don't realize how important real estate is when it comes to your tax liability. The really rich realize that they can use the tax code, which has numerous benefits in the real estate industry. So using and leveraging real estate on your tax return actually reduces your tax liability, and it generates long-term wealth. That's what people don't realize. You are putting your money into real estate, which grows and appreciates over time, and you can have a consistent cash flow that you're not paying tax on these properties. And even at the end of the day, if you want, you can pass on this real estate to your kids or your family tax-free. It's tax-free money.
I think that I just was at an event last week, and they were talking about some of the statistics, and people that own real estate, their net worth is 44% higher than people that don't own real estate. And something else that we see a lot of times is, I just had this conversation with a client. They had a property that they lived in. They moved out of it and bought a new primary residence and turned that one into a rental. But they have a child, an adult child that's living in the property and renting it, and they weren't going to report that rental income. And I said, no. You have to, for a lot of reasons. Look, they're a little under market. They're doing some things to help their kid out, and I totally get that. But they still need to report that. I said, you guys are going to leave a lot of tax benefits on the table if you don't get that on your tax return. The other piece of it is if they need to do something in their own lives, they're going to hurt themselves because they're not going to have the documentation that property has had some income offsetting the expenses on that. So it's really important to talk to an expert. It may sound simple, but it's not. You really need to pay attention to this. And something else I want to share, capital gains. Let's talk about this. So when people have investment property, a lot of times they're pretty good about keeping track of improvements, maintenance, things like that. So when they do go to sell, they can have that offset on any capital gains they might be faced with. But many people that own their primary residence are not keeping track of these things.
Yes.
And it's really important, isn't it?
Yes, absolutely.
Yeah.
Yes.
I think that when you go to sell a home, and if you're lucky enough, the capital gains thresholds are pretty significant. If you're married, it's $500,000. If you're a single person, it's $250,000, right?
Yeah. So there's exclusions there. Yeah. So basically, you have to live in the property for at least 2 out of the past 5 years. There's a few things that you need to qualify for that primary residence exemption. Which you're speaking about $250,000 if you're single, or $500,000 if you're married.
Yeah, that's an important distinction because it's a different animal if it's an investment property. But at the end of the day, if you've owned a home for 30 years, you've put a lot of work into that house. You've probably put a roof on it. You've definitely upgraded your major appliances, your AC, your hot water heater. You've probably done some renovations, and you probably bought it for significantly less than you're selling it for. So having a good record of those things is going to help you accurately manage those offsets of those capital gains.
Yes, for sure.
I was
definitely
working on it.
Make sure you keep your HUD statement from when you purchase the property, and have the one when you're selling the property. Yeah,
your closing disclosure statement that we don't do. HUDs are out there for some transactions now, but they call it a closing disclosure now. You want to keep those, and you want to keep those for a long time, way past your tax filing years, because of what we're talking about, because they're going to want to see what your expenses were to get into that mortgage, or that house, I should say, and then also what your expenses are departing, and those are things that you can take into consideration. I started to build a capital gains tracker. I need to finish it because it is really important, and I don't think many people keep track of these things.
I have one I could send you.
Yeah, that's amazing. Here's another thing too, guys. If you buy a home and now you're going to go sell it, one of the things that your real estate agent is going to ask you is, what's the age of the roof? What's the age of the hot water heater, the AC unit? If you're keeping your tracker, if you've got all these things documented, you're going to know those answers. They're going to be accurate, and it's actually going to help you market your home accurately as well.
Yeah, absolutely.
Yeah.
For sure. Definitely keep track of any improvements on the property. I mean, your purchase price plus any improvements is typically the amount is what we call basis. So we want to get to that number because that's how we calculate your tax and capital gains.
Yeah. So you may think, you bought a home, your plan is to stay there forever, but life has a funny way of throwing curveballs. And sometimes we do and sometimes we don't. But even if you do, and then, now your estate, what happens, what happens if I buy my house and 30 years later, I pass and now my kids have inherited my house? Are they subject? Is there any concern for them having those records?
This is a whole different conversation.
Okay, all right, another video.
At another day, yeah. Then we're getting into the trust laws and stuff like that.
All right, we'll do that. We'll do that another time. But yeah, if you own real estate, you've got to make sure you're getting tax advice. Alex, give us your website again, please.
Sure, it's www.irsowatoday.com.
All right, awesome. Thank you guys so much. We're always here bringing you education. If you like this, please hit the subscribe button below. We appreciate you taking the time to listen. We hope you found this helpful. Thanks.